Yeah, this is my topic for today, investing with an advantage over others. Right, I'm the COO of Share Investor, right, and I've been investing in the market for the last 25 years, right, and for the last 25 years, actually, there's a few things which I learned, and I hope that, I can use this opportunity to share with you some certain general principles if you want to invest, and how do you get an advantage, right, by investing, right? So first of all, of course, the disclaimer, right? Anything that we are sharing today, these are my own personal views, right? And if you are going to be trading, investing, please check with your TR, your trading representative, okay? So why invest, right? A lot of you, right? This is a very obvious answer: to make money, right? And the theme for the exhibition today, right? Invest fair, grow your money lah, right? But what is your target? I think that is important, right? Because if you don't have a target in mind, right, you will never be able to know how you should achieve the target. So first of all, you must have your target, right? And giving an example, let's say you start with 10,000 ringgit, right? In the year 2023, this year, if you start investing with 10,000 ringgit, what will you get, right? At the end of 15 years, you get 41,000. Not very spectacular, 10% gain. Just 10% gain, you get 41,000, right? About 3 times gain. If you had start with 10,000, but with 15%, right? Compound 15% over 15 years, you will have 81,000, right? 7.1% gain, right? And if you were to get about 20% year on year, every year, right? You will get 154,000, starting from 10,000, right? So that's something exciting to look forward to, okay? And when I was researching this, right, I think quite a number of speakers actually shared this. Albert Einstein said this, right? Compounding is the 8th wonder of the world, right? So I was searching, and did he really say this? Actually, I was skeptical, and then I found that he actually. Other people attributed this instead. Compounding is the most powerful force in the universe, right? And Albert Einstein, right, he talked about the universe, maybe makes sense lah. But if you do a bit more research, we are not very sure, right? And I'm not here to say whether Albert Einstein is the first or the second statement, okay? But the key here is the power of compounding, right? When you compound your what you have, right, over a certain period of time, right, you will have a very large sum of money. Okay, so what's the lesson when I share, right, in the slide just now, right? There are 2 lessons that I thought that you should know. First of all, you need time, right? If you want to make a certain amount of money, you cannot expect that 10,000 ringgit now, right, tomorrow I'll have 20,000 ringgit. It is almost impossible for it to happen, right? So you must have patience, right? And just now I shared 15 years, okay? That's one, okay? And the second thing is, you can be reasonable in what you want to have, your target. Do you need to double your money every single year? The answer is no, you don't need, right? Even a 10% growth every single year, right, will give you a 3.2 times return, right? 20% annual growth, right, will give you 14.4%, okay? So what we should do is always have a reasonable target, 10%, right? And can you achieve 10%? I think if you know 10% year on year, maybe a lot of you will agree. I think this is possible. And as a statistic, right, what are the top money managers making every single year, right? They are also not making 50%, 100% gain every single year, right? They only make about 15 to 25% annually, consistently. Okay, so the other principle which I thought that is quite important, which has always stuck with me over the years, is this. Warren Buffett also say this: never lose money, right? And rule number 2 is never forget the rule number 1. But have you ever thought about why he said this? Okay. And the reason is, you want to make money, the key is you must limit your losses. Okay. And I will give you an example, and this example, whenever my stock is going down, all right, below water, I always use the example to always remind me to cut loss. Okay, so imagine, right, you have 10 ringgit now, okay, and your investment dropped by 50%. So what do you have? 5 ringgit, right? That's very simple, right? But have you ever thought of this? If it goes up by 50% again, right? It drops 50%, go up 50%. You only get 7.5 ringgit, right? You are below water. Do you realize that? Okay? And for it to go back to your initial investment, even before you start making money, right? It needs to double, right? So I hope that this is I always use this to remind myself, right? If you need to cut loss, you cut loss early, right? Because if it goes down by 50%, you need to double the stock needs to double before you, just to break even, right? It's not even about making money, okay? So this is something that I hope that, for all of you, when you get back, right, you remember this example. Okay. Another thing which I realized, right, after I talked to a lot of investors is this, right? What works for me may not work for you. Why? Because everybody's risk tolerance is different. Everybody is different, right? I am at a certain age, right? I have a family to provide for, right? I may not be able to take as much risk as somebody who's younger. Somebody who's younger may want to take more risk in exchange for more growth, okay? So what I'm trying to convey in this slide is this, right? Just because something works for your friend, right, or somebody works for an educator or trainer, doesn't mean that it will work exactly the same for you, because everybody is different. So do not blindly follow the rest. I think this is a key point which I realized. How many of you have also, received tips from a friend, right? Hey, go and buy this stock, right? Go and buy this stock at this price, right? I mean, I have, right? But one thing I also realized this is when the tip comes, right, and I go and buy the stock, my friend don't tell me, hey, after this, go and sell the stock at this price, right? So I may be buying the stock and I don't know when to exit. And maybe 1 month later, I tell my friend, hey, I still have the stock. And you tell me, hey, I sold it off 3 weeks ago, right? I already made how much money, right? So a lot of times, right, I realize some investors will just blindly follow what others say, right? Without realizing why they are doing that, why they actually promote the stock to you, okay? And more importantly, they don't tell you when to exit, okay? And one of the realization that I had was this, okay? Everyone, if you act in the same way, right? If there is something special in the way they act, right? Because everybody now acts in the same way, you eliminate why that strategy worked in the first place. You realize that? Let's say you look at TA, and let's say the TA, and you want, a lot of people will say, okay, look at the 5-day moving average and the 20 days moving average, right? When you cross over, then that is a golden cross and you go and buy, okay? And if it's the other way around, then you go and sell, right? But now, everybody follows the exact same rules. Do you realize that? And when everybody follows the exact same rules, will that work? Will that strategy work? It might not work, right? Because everybody follows the same way, herd mentality, okay? So I think it's very important that you must develop your own investment strategy, and you must be consistent in how you approach those investment strategy, right? If you do something random, hey, today I look at this and then I just buy for whatever reason, and next day, right, you change that approach, right? You should expect to get what we call random approach. You get random results, right? So, to me, you trust nobody else but yourself, right? In investing. Investing is a very lonely game, right? Yeah. And why? It's because this, right? We are swimming in a pool of sharks, okay? And if you look at this image, right? Who are you, right? You are the little limo, right? At the lower left-hand corner. You are not the shark, right? Everybody is trying to eat your lunch, okay? And hence, you must be careful when you are trading, investing for that matter. So how do you actually get the edge investing, right? That's the topic, right? You need to view the market completely, right? So if you only hear a tip from your friend and you buy based on a tip from a friend, right? Are you viewing the market completely? I don't think so, right? Because you don't even know why you're buying a share, okay? So one of the key thing is you must use quality tools, right? There are a lot of tools available, right? In this fair, there are so many exhibitors, right? Everybody have their own tools, right? And some of the tools may work for you. Of course, I come from Share Investor. I hope that you use our tool, right? But you can also use any other tool that's available from our partners, right? But you understand those tools, okay? And if you don't use those tools, you're just viewing a very small part of the total picture, right? You're not looking at the entire picture. You may not be able to perform in the manner that you want, okay? So don't be penny wise, pound foolish, right? So what I'm trying to say is this. Some tools, you have to pay for them, but there is a reason why you have to pay for them. And if you say, oh, I only want to use anything that's free, right? I don't believe in paying. You might be saving some money there, right? But in the long run, right, if you are unable to see what's really happening in the market, right, you might just be foolish in that aspect, okay? And my last point, I think, is very important. You are going to war, right? Just now, you remember the Nemo picture, right? You are the little Nemo, right? So do you go into little Nemo? Yeah, if you are little Nemo, do you look up all the weapons that you have? Right? You should, right? Because all the sharks there, all the weapons, and they're bigger than you, right? They want to eat you for lunch, right? So you are going to, so the superior tool will gain you an advantage, okay? So of course, I want to promote our own suite of products, right? Share Investor, we have our Web Pro, we have our station, right? And this will help you, right, to actually make the correct trading decision, okay? And just briefly, right, Web Pro is a web-based product. If you have a browser, you can access all the information that you need through your browser, okay? Share Investor Station and Bursa Station, those are a workstation, right? It's something they install on your PC, right? And it's used by a lot of traders, brokers out there. So what they do is, they install it on their computer, right? And they have multiple screens, right? You can see this image here, multiple screens, and then the things are real-time flashing, right? And it makes it very easy for them to get, to customize the layout and what they want, right? But the data for both Web Pro and Station actually comes from the same source, okay? And hence, right, you will actually get the same similar information whether or not you access it through Web Pro and Station, okay? And one interesting thing about, not interesting, one important fact about Web Pro and Station is this, right? It covers 7 markets, okay? So Malaysia, Singapore, Thailand, Indonesia, Australia, Hong Kong, and the United States, okay? So when I look at the shares I want to buy, I don't want to limit myself to just Malaysia stocks, right? I want to look at maybe the Hong Kong stocks, same time zone, right? Or maybe the US stocks, because everybody is talking about US stocks, okay? So for the next part of my sharing, right, what I want to do is I want to go through 4 recent trends, right? 4 recent trends in the market, and I want to show you what you can actually get if you use the tools. How would I actually make trading decisions or investing decisions based on those tools? And the 4 trends are this, right? I think high interest rate, number 1, right? Oil and gas, the ONG revival of the industry, right? The crude palm oil, right? The price trend, right? How it affects the plantation stocks. And lastly, thing called revenge tourism. Okay, so let's look at bank profitability. Now there's high inflation, right? Everybody complains of high inflation, right? Everything goes up in price except your salary, right? So everybody's suffering, okay? And other than high inflation, you have high interest rate, right? So that's all correlated. But how does it affect the bank profitability? How does bank make money, right? Bank makes money because, depositor deposit the money, the bank pay you some interest rate, right? But with that money that is deposited in the bank, they will actually loan out, right? And at an even higher interest rate. So they make the difference, right? They make the difference. And historically, it has always shown that when the interest rate is high, the bank profit actually goes up, right? So sometimes, I'm as a consumer, I always feel that, if I have a loan, the bank is actually making more money out from me, okay? But if I'm a shareholder, actually I like the high interest rate because it will help the bank's profitability, okay? And if you look at the top 3 banks, there are 3 banks, the top 3 banks in Malaysia by market cap, Maybank, CIMB, Public Bank, okay? This is not by market cap, this is asset under management. By asset management, under management is Maybank, CIMB, and Public Bank. But if you go by market cap, it is Maybank, Public Bank, and CIMB, okay? So if you look at them, compared to the year before, right, they have all improved their profitability, right? High interest rate is helping them. But if you look at the share price, actually the share price not that good, right? Correct. So if you want to buy a banking stock, right, if you want to compare these three banks, how are you going to do that? Okay, in Share Investor, it's actually very simple. Okay, we have something called the stock comparison, right? With the stock comparison, you can at a glance tell you, right, what each of the banks are doing, what are they doing well at, okay? So if I compare these top three banks, okay, based on profitability and management efficiency, oh, it's very small, I didn't realize that, okay. But these are all the ratios, okay? On the left, is what you see is all the ratios. So the ratio which I'm highlighting here is the net profit margin. And Public Bank has about 30% net profit margin, okay? Oh, I must see on the TV, it's easier, okay? But Maybank and CIMB is also not too bad, okay? It's about 20%. I apologize that the numbers are a bit small, okay? And the other thing which I realize is this, right? If I look at all these ratios, Public Bank has actually the most efficient management. Why do they have efficient management? Because their ROA, ROE are the highest, right? They return the most profitability back to the shareholders based on whatever funds that they have. So they have the most efficient management. Okay, but if you look at the valuation, sorry, you can't see this table, okay? But if you look at the valuation, P/E ratio, how do you look at valuation? You look at P/E ratio, right? So CIMB actually has the lowest P/E ratio, okay, about 9 times, okay, compared to Maybank and Public Bank, right? So in this case, Public Bank is priced about the same level as Maybank. And if you look at the dividend, because a lot of people buy banking stock for what? For income, right? So the three banks, right, the lowest level dividend from each of the three banks are 4% to about 6%, okay? And Maybank has the highest dividend yield, dividend payout, okay? So what is the key takeaway? Okay, so if you look at all this comparison, right, the answer, then you ask me, so which bank should I buy if I want to buy a banking stock? Okay, the answer is this. If you are an income investor, right, that means that you are looking for the bank to give you the dividend year on year, right? Maybank is actually the best because it has the highest dividend yield, highest dividend payout, okay? But if you're looking for growth, right, you are a value investor looking for growth, then you can consider either CIMB or because of its low PE or Public Bank, right, for its efficient management, okay? Okay, the second market trend that some of you may realize is the oil and gas industry, okay? Oil and gas, I look at some of the speakers have been talking about this as well, and now we are in the up cycle for oil and gas, right? If you look at the number of stocks that we have listed in Bursa Malaysia, you will see that a lot of the stocks, right, they are cyclical in nature, right? Plantation stocks, right? Oil and gas stocks, your airlines, etc., right? They are cyclical in nature, and some of these cycles are very, very long. Okay, oil and gas cycle is actually very long. Okay, it can last more than 10 years. Okay? And it looks like the oil and gas, the bull cycle is coming back, right? This is up cycle. Okay, but some of you may ask, hey, but a lot of people have been talking about renewable energy. They want to switch to the green energy. How will it affect you, right? Why is that an upcycle for oil and gas when that renewable energy is coming? The reason, when I was talking to one of my team members, right, it's very simple. He gave me an example. He said, hey, it's actually very easy. You can change your mobile phone every year, even every month. But how easy is it to change your car? And what does your car run on? Fossil fuel, right? So it is true. There is a replacement, right, to go to renewable. But that replacement will take a very long time. But then, as of now, if you look at the cycle, the upcycle is coming, right? Or rather, we are already in the upcycle for oil and gas. Okay? And even Warren Buffett also say this, right? He has made a 39 billion bet on oil stocks, right? And he has never betted on oil stocks. Recently, he has actually invested $39 billion on oil stocks, right? If you want to see what made him change his mind, you can scan this QR code, right? We actually wrote an article about this. But one thing about cyclical stocks is this, okay? Because the cycle is so long, right? And if you look out there, you will see, hey, you need a lot of historical data to be able to analyze cyclical stocks. Because if this is just the beginning of the upcycle, And if you have, let's say, 5 years of data, right, you will only have data on when the company was in a down cycle. So you do not know, right, how was it performing during the up cycle, right? So that is very important that you have a lot of information so that you can see how a company actually performs during the up cycle. Okay, and Share Investor, we provide more than 10 years of historical data, enough data to make sure that you can analyze the company correctly. So one company that I wanted to share, right, Verdana, okay. If you look at this, right, I have one chart here that plots the price over free cash flow. The other one is the P ratio, okay? And the chart on the right, is the most recent financials. And what it shows here is this, right? It has it's the first time in its history that it has positive free cash flow and positive earning, right? And even excluding the impairment at the current price, the share is trading at 8 times free cash flow. And if you look at the historical data for the last 10 years, okay, this is the historical price, right, over every single year, right? Investors were willing to trade the stock at about 16 times PE, right, which is quite a lot, okay? And if you may not see this here, right, but the number here is about 138, 170 compared to the price now, which is about 20 cents, right? So during the up cycle, Verdana was trading, right, at much higher valuation, right, compared to when it was at the down cycle a few years ago. Okay, another chart that I did, right, looking at the fundamentals of the company, right, they actually decreased in the last few years, right, Verdana actually decreased its capex. So capex is capital expenditure. So when you know oil and gas, right, they needs to invest a lot of money in the capex, right, into its equipment, right. So it has actually decreased its capex, and that improved its cash ratio, and it has also decreased the amount of debt that it sold, right. The debt to asset ratio has actually decreased, right. So you can see it here, okay. So it is traded way below the pre-COVID price range, right, if you look at Verdana. Okay, and this is how the price chart looks like, right? So I also look at the price at the last stage, right? I look at the price and I look at it, everything seems to be good about the company, right? The only key thing is, right, now that the financials is improving, the profitability is improving, you know, how will the company do, right? Will it even declare dividend, right, in the foreseeable future? That this is a big question, okay? But this is something that you may want to look out for, right? Verdana. Okay, third market trend, FCPO. FCPO, for those of you who are not very sure, right? This is the crude palm oil futures, right? So in Malaysia, I think all of us talk about this, right? And last year, crude palm oil actually ran up, right, to about 8,000. Okay, now it has dropped back to about 3,000, right? And I have this chart that I actually plotted, right? And maybe just to show you what it says. Okay, the one in yellow is actually the crude palm oil price. Okay, and you can actually see it since 2000, which is right on the left is 2022, and on the right is actually the time now. Okay, and you can see the run up, right? So what I'm trying to do here over this chart is not only look at the crude palm oil price, right? I also look at the Sime Darby, IOI, and Teck Guan, another company called Teck Guan. Okay, all in the palm oil industry. Okay, and what I want to do here is really to see whether there's any correlation. When the crude palm oil price increase, the Sime Darby increase in price, the IOI increase in price. And this actually shows that yes, there is a positive correlation, but not as much, right? If you look at this region here, right? Last year, crude palm oil price went up, spiked, right? But this is IOI, this is Sime Darby, okay? But one company which I noticed, I actually plotted quite a few, right? Is this company called Teck Guan, right? When it went up, it went up quite a lot. So even now, right, it is still elevated, right, for Teck Guan. So after that, when I saw this, I went to look at the fundamentals, right? And Teck Guan historical PE, 2014 to 2017 was 4 to 5 times. Whereas Sime Darby historical PE were around 14 to 24. And what is evident from this is this, right? These are big companies, Sime Darby big company, right? They value stability. The market value stability and predictable dividend. Okay? So, but for take one, will there be upside, right? If the palm oil price remains stable, will it remain stable, right? This is the question, right? That we don't know, right? But if it remains stable, is this a company that you want to look at? Okay? Okay. In case some of you were wondering, how come you are looking at these companies which are not so famous? I'm not sure how many of you have heard of Teck One. The answer is very simple, right? In investing, do you buy a company when everything about the company is known and everybody's talking about it, right? You will realize that if you do that, a lot of investors actually buy high and sell low, right? So if you want to invest, one key factor is this, right? You have to discover this kind of companies, right? Which you can allow you to buy low, sell high, right? That is what you want to do, right? Buy low, sell high, instead of the opposite way. Okay, the last market trend that I want to touch on today is this thing called revenge tourism. Okay, so revenge tourism, right? I wanted to use this to highlight AirAsia X. Okay, and if you look at AirAsia X, the price actually ran up quite a bit, correct? In recently. So is this a company that you want to actually invest in, right? And that's where, you know, having the tools actually helps you. Okay, so there are quite a lot of positive. And if you read the news, right, it's very positive. Or they tell you, oh, turnaround story, it was almost bankrupt, right? 3 consecutive quarters of profit now. Okay, it has free cash flow, 90 million to its market cap of 850 million, right? So it looks very positive. Okay, but after I dig in through Share Investor platform, right, one thing I realized, hey, and I think most of you know, right, it almost went bankrupt, right? But it was able to restructure its liabilities. And the amount of liabilities that it restructured was 7.1 billion. That's B, right? That's not million. And if you look at the market cap of the company, it's only 850 million, right? Can you imagine how much liabilities that it has? But it has, in a way, to restructure most of its liabilities, right? And there's this thing called the waiver of debts. I was looking at its financial statement, waiver of debts. So it's like a company owe a lot of money, and they talk, and then suddenly you know you pay back the money. So this is a one-time gain for AirAsia X, right? So will it be recurring in nature? The answer is no, right? Because can it still waiver its debt now? I doubt so, right? But whatever that was promised in the past, yes, of course, right? So they recently just released the result, which I went into the globe, right? And there is also under other operating expenses. If you look at the other operating expenses, right, there is additional waiver of debts that is actually, you know, even present in the latest quarter. Okay, and if you look at it, they're also going to do a share placement, right? It's a share placement is going to be at a discount, and share placement is not that good, right? So they are trying to raise 50 million for working capital, right? So these are the key things that you should look at, right? If you just blindly follow the market, right, which is this revenge AirAsia X, right? Oh, because the market is opening, everybody want to travel, you feel that there is a lot of possibility for AirAsia X. You may want to buy it, right? But you should be careful and you should know what you're getting into. Okay? So don't just read all the positive story and think, oh, I can go and buy. But revenge tourism is true, right? A lot of people want to travel. I also want to travel, right? Everybody that I know of, right? They all of them want to travel, right? But if you can't look at AirAsia X, is there other companies that you should look at? So I have 2 recommendations, okay? First of all, Cathay Pacific, right, in Hong Kong, listed in Hong Kong, okay? If you look at the share price, it is below, right, or the all-time high, about $12. Now it's about $7, okay? And they are still recovering, okay? One thing you realize is this, the COVID, right, almost bankrupt, or should I say, yeah, almost bankrupt all airlines around the world, right? All airlines around the world were struggling, okay? Some of it really went bankrupt, some of it, their government rescued them. But one thing that you know about airlines is this, right? If they've gone through this cycle, they are now much leaner and fitter, right? Not the kind of airlines that they were pre-COVID, right? They may have a lot more staff. Now they have lesser staff. They can do the same thing with their lesser staff. Their cost has decreased, right? They're productive, right? That is why I'm very bullish on airlines, right? And I'm bullish on Cathay Pacific. Why? Because they have yet to recover, right? A lot of airlines around the world have already recovered. Cathay Pacific have not recovered due to some issues, right? The bad publicity, etc. And they are the last, right, to recover. But they are still trading, right, below their peak, right? So this is something that you want to look out for, right? And they know that, and the airline has already announced that even by the end of this year, they can only recover less than 70%, right, of their original flight capacity. Okay, and target price is about 9 Hong Kong dollar, which is about 20%, 25% upside from what it was at the end of May. Okay, another company, of course, if you say Cathay Pacific, we're not very sure, right? And are you sure revenge tourism is real? You look at SIA, right? SIA listed in Singapore. They just announced record annual profit, 2.2 billion. It's record profit. It is not profitable. It's record ever, right? Since the lifetime. This is the highest profit ever. And they almost died as well, right? But they are able to achieve record annual profit. Why? Right? Because all the airlines, they went through the COVID times when everything was very bad. And they have to cut staff. Now they know, what they need to do to be much leaner and fitter, right? To take on the competition, right? So SIA, right, is something that you may want to look out for, okay? Okay, so those are the 4 trends, right, that I shared, okay? And for InvestFair, right, our booth is right at the corner, right, when you come in, and we have a special promotion for our tools, right? If you want to understand a bit more on how to use whether Web Pro Station or Bursa Station, right, come and look for us, right? Come and look for me. We have a 20% discount. So booth 02 right at the corner, okay? So with that, I thank all of you for your time. Thank you.
All right, once again, thank you so